Hi and welcome back to my channel Gold X, and here you go. We talk about high and low. What means? It can be definitely said that the most important principle of this market is to understanding high and low. It means the ceilings and floors in the market. For example, we call the highest ceiling in a day and the lowest the market floor of that day. If we examine the market in each season, high and low, each season is important. The second type, high and low, is in the process and range. It is true what we call every ceiling and floor, high and low, and it will be the same in the future. But we are discussing the definition of an high and higher high and lower high, and the definition of a low and lower low and higher low trend. We also call the upper level range high and the lower level range low. This topic is so important that if someone is weak in it, he should spend the maximum time to practice and learn it. And if someone is not able to communicate with it, he should say goodbye to the market. For example, in a decelerating trend, when highs and lows approach each other, if they level or break, it tells us that the trend is over and in the future we should wait for range or return. Regarding the third type, high and low, I should say that we are talking about the highest point and the lowest point of a candle. Each candle can have shadow or without it. So the highest point of the candle is shadow or the body of the candle, and the bottom of it is the low candle. But these three types of Y are also nouns because all three types are about points, but depending on the strategy we use each of them. When it comes to training, focus on the trades to understanding the trend and the return signal well. Exercise. Determine high and low every day and every season, and in every season high and low all trends per day for about 1 week, examining the candles at the beginning and the end of the process or getting out of range.